talk to you about the seismic changes in our markets and what that last 30 years has been like and what that means for you for the next 5 to 10 years, because what I went through in the last 30 years is going to be accelerated for you in the next 5 to 10. And as I said, I'm going to provide some tips which I hope you'll find useful when you leave here. So my first day on the trading floor was Monday the 19th of October 1987. And most of you here will have no idea what that means, but one or two people who are as old as I am, that was the day of the crash of 1987. And I'd got my job in the pub on a Thursday night just several days before at about 10 o'clock. My boyfriend was a cash bond broker in the market. I'd left university. I was travelling around. And I was just going to do some waitressing before I went into foreign affairs. So a completely different career. And he said, don't do that. I'll never see you. You'll be working nights. I'll get you a job as a futures broker. What's a futures broker? Don't worry, you'll be fine at it. And I showed up on the morning and it seemed very noisy and busy. And it was an office and in I came and there was a lot of swearing and people were throwing phones that were attached to a long curly thing and smashing them. And finally a guy looked at me and he said, oh, right, you're here, right. You need to go here. And I had to walk out of the building to another office about half a mile away. And then I walked into a room of 800 people with trading pits all yelling and screaming, and it made absolutely no sense to me whatsoever. And I was thrown in the deep end because it was the crash, and Australia was the first market to open. And the crash was initiated because you had a massive thunderstorm and a rainstorm here in the UK actually on the Thursday night. And the markets couldn't open fully on the Friday. Very few people got into the floor. Risk couldn't be hedged. It started a trickle-down effect in prices. And when the US came in, it catapulted. And then by the time we came in on Monday in Australia, the first market to open, it went 4 basis points in the 10-year bonds, which is quite a bit, all in about 2 hours. So it was a really busy day. They put me onto a phone in a pit and said, repeat exactly what that guy says down that line and tell that guy there exactly what he said. What he says, tell it back again and don't make an effing mistake. And write it all down. And the time you did it. So I did 10,000 lots in the first trading session the first 4 hours. Meant nothing to me. Each lot was worth $1 million. I found that out a lot later. I didn't make an effing mistake, and so they let me back on in the afternoon. And actually after 5 months I was hooked, and I gave up my career in diplomacy, which like all people at uni back then I had chosen because I got to travel the world, meet people and go to good parties, I thought, for a career in finance. But it wasn't just the lure of the energy. There was something very real about what we were trying to do, and there still is. So don't be discouraged by a lot of the things that have happened in the last 30 years. So I was one of 3 only women on the floor of 800, so I was 0.37% of the population. When I started, your word really was your bond. It meant something. We transacted, we did it verbally, and that deal was done, no matter how large the size. The ethos was, and it was drilled into me by my managers and by the people that ran the companies I worked for, was that it was customer first, the client is always right, the company second, and me third. And that was the structure. Flip forward to 2008, and that was flipped on its head, I believe. But in the meantime, we had a lot of change. 1991 interest rates went to 17%. Unbelievable where we are right now at 0%. Technology started to come in the markets. By the end of the 90s, we had some real change in technology, and exchanges were embracing electronic trading. Floors were closing. By then, our floor was about 1,200 in Sydney, and there was 35 women, so I was 2.4%. So the ratios were going up, which was good to see. 2001, we had what was called the tech wreck. We heard a speaker talking about that earlier today. And I think that was really the foundation for where we are with this real technology change that we're seeing, which is going to really, I think, fundamentally transform the way we offer services in our industry going forward. So don't be despondent if you're not a techie person. I certainly am not. There are going to be many, many roles around that, including sales, accounting, finance, that need to support the growth of this business. 2004, we started to see massive exchange consolidation, which means the big entities that were national entities started to consolidate. CME Group is one of them, and bring more money together in one place and getting economies of scale. 2008 happened. I settled on my first mortgage in London on Friday, right before Lehman went under. So you would argue not necessarily a good trader, so I thought I'd paid the top of the market. But as it turns out, that hasn't been the case. London has continued to thrive despite that. But the difference between that was that the ethics and the ethos had changed in the markets. It was flipped completely on its head. It was me first, company second. And I'd like to say the client was third, but I think the client was even out of the equation altogether. They were the patsy that were people who were trying to make money from. And that meant our markets were broken. So we saw a massive regulatory push to change that. And we've heard Steve and others talk quite eloquently about what that did, try to level the playing field, but it also took out a lot of the innovation in the markets. We've got through a lot of that now, and that regulatory-driven change versus the economic change and the markets-driven change that we had earlier in our careers is starting to settle down and bed down. And in many asset classes and in many markets, we're now looking to the future, and fintech and regtech is very much a part of that. And I'm happy to say, sitting on Deutsche Bank's board, I'm one of 5 women, including the CEO and the CRO of the UK bank. So I'm part of 42%, so it's improving every time. I believe competition along the value chain is really driving opportunity. And that means partnership and collaboration, not owning the whole end-to-end cycle. So many of the institutions I've worked for in the past, and some that I haven't, have been all about owning the value chain. And I think partnership isn't a sign of weakness, and that owning that value chain will no longer be desirable going forward for many reasons, but the regulatory reform agenda is certainly making it so. And there are a lot of new players in the market, and you've heard from some today, that are really driving that change. And the whole blockchain, cryptocurrency, distributed ledger technology discussion is just one very small part of it. It really will solve certain things in our marketplace, and it will have a seismic change in the way some services are provided and the way some things operate. But it's not going to be the only thing, and I think it's probably about 5% of the discussion that's going on right now amongst people in that space about what the future really does look like. Startup culture is being not only supported, but it's being rewarded. In the UK right now, we have a great fintech, regtech, startup enterprise structure down at Old Street and beyond. The government is providing all sorts of funding, not just to people who want to start up, but people who want to invest in it too. 50% tax breaks through SEIS, 30% through EIS. There's a lot of opportunities, so much so that I'm working with 4 people who, like myself, have stepped back from bigger roles in the markets and been doing consultancy to set something up around that that's looking to the future, around creating funds to invest and also using our consultancy skills to bring good governance and bring experience into these startups, because several sophisticated technology people may have some great ideas, but they may not know how to run a business, how to expand it, how to sell it. And if you're sitting in a pool with 30 other entities all trying to sell to the same poor guy at Morgan Stanley or at a buy side, you're going to get very little bandwidth and space. So it makes sense to start bringing these together and pooling resources going forward. And I also think the ethics and the values that markets have displayed historically will start to come back to the fore, and you're part of that story. You don't want to see what happened in 2008 happen again, but you do want to be able to be part of that success. So the way you earn money, the way you expect your companies to behave, the values they deploy, the tone from the top with management is something that you'll be very key in driving. So what does this mean for your career? And it is a career, it's not a job. You do need to find your voice within the organisation and within the teams that you work in, and you have to work on building your own personal brand. So I'm going to give you a few tips that I wish I'd known when I first started, because I certainly stepped into a place with 800 blokes all yelling and screaming that all came from probably 6 private schools in Sydney, and I was one of only 4 people who'd even been to university and had a tertiary education, because they looked for country boys who were good with numbers, that had a fairly stable personality but probably had played rugby, actually, which was a useful tool in the pit. So my first pit job, I stood on the top step and I was doing the flow for a bank in the 10-year bond pit, so it's the biggest market in Australia at the time. And the pit held about 200 people, and it was a step down about that far. And the guy in front of me played second row for the Wallabies. If anyone likes rugby, you can imagine how tall he was. So he was about John or Simon's height. So I could just see my eyes over his shoulder. And this is an old way of, this is pre-technology, so the way of solving that, because I was the only female voice in the pit, so they could hear me but no one could see me, and hand signals were very important when you were trying to do something, yeah? And that was how you communicated everything on the floor. So I went to the board of the exchange, all 5'2" of me, and I said, I need to be able to see over this guy, because there was no way he was moving in front of me. It was a prime position. We had the flow for First State Fund Managers, which was the biggest fund manager in the Southern Hemisphere then. So he knew by standing in front of me, when I got to at the end of trying to add up 10,000 lots and I had 35 left, I was just going to give it to him. And by then the market has probably moved in favour, and it would be a great trade for him. So the board actually held a special board meeting to agree to build me a box. made of the same stuff as the training floor was made of, which they called Lily's box. You can imagine the fun on the floor they had there. It was a pretty non-PC place to work. I can talk about that privately if anyone wants to know. And we had to hire somebody to step in and take the box away when I had to plunge into the pit to try and grab someone to agree a trade. Thank God all of that has changed. It wasn't an ideal working environment to work in, and very, very few women for obvious reasons. So you had to have a certain personality type to want to work down there. And I think the opportunities for you in markets these days, male, female, wherever you're from, diversity really matters. And from sitting on boards, I see boards that are diverse, that embrace diversity across the board, no matter in what way that is. Those companies do better. They're higher up in the rankings from a revenue perspective, and they're more pleasurable places to work. So here's some suggestions. Self-assess yourself. What does that mean? How do you show up inside your organisation to people, to your peers, to your managers? Be very present next time you're making a request or having a conversation with someone more senior than yourself, and try and assess to how you come across from their perspective. Is it positive? Is it negative? And here's some things most managers will be looking for. Do you demonstrate good interpersonal skills? Do you have leadership presence? Do you show good judgment? Are you a doer? Really important in the first stages of your career. Do you have the technical expertise? And if not, what are you doing to enhance on that? And how do you manage conflict? Or indeed, are you someone who creates it? You need to think about what your CV says about you, but not only that, LinkedIn, Facebook, Twitter, and what's your personal elevator pitch about yourself? Everyone should have one. In about 60 seconds, you should be able to say what it is, who you are, what you've achieved, and what it is you want to do and what you're looking for. And on your CV particularly, if you can monetize anything you've done, it doesn't matter what it is, working at high school, working at university, all those things show that you're forward-looking. You need to have a career vision for yourself. You've got to set really clear, specific aspirational goals and objectives, and you need to write those down. And you need to go back and look at those constantly and make sure that they still resonate with you. You've got to be very clear on what your motivation is for doing something. What's your ability? What are your skills? What's your education and experience? What are your behavioural traits that will enable you to interact with people in the marketplace? And you need to design what you want for your work-life fit. Because when I was coming through, we didn't have a choice. You just, especially as women in the market, I've got twin 3-year-olds. I had them very, very late, and I was very lucky, my partner and I, that we were able to do it. And I don't recommend waiting very late in life, but it's very hard to find a time, whether you're a female or whether you're trying to have kids yourself with your partner, because everybody wants to be involved these days, and you really have to create a work-life fit that works for you. And you need to be very clear on what makes you happy and what you aren't prepared to compromise on. And be very courageous. And you heard about flexibility before, about being flexible in our markets, and you need to be very flexible and open in our business these days, especially to new ideas. The last thing you should do is create an action plan, like a blueprint for how you're going to move forward. And it can be very simple things. Identify an appropriate mentor. And a mentor doesn't need to be someone inside the organisation within. It can be someone senior, and you can find them through networks or even through your parents or through family, friends. It's someone who understands the business that you want to go into or are already in, that can give you advice as you work your way through. That's different to a sponsor, who should be someone senior in the organisation that you're with, who understands you and has got to know you. So I'd say learn to be comfortable with being uncomfortable, because that's the only way you're going to learn and to get ahead. And you need to be your own PR machine. Don't let yourself be called assertive or argumentative. I have been called that. If a peer demonstrating the same behaviour, no matter what the sex, is branding strong and forthright, right? It's all about how you present yourself.